what I told you, that if this wants to go down, you have to wait for 5 days to start trending down closer to where the 20-day moving average is. Because if this wants to head down, 5-day has to cross below 20-day moving average. Build liquidity on the way down. So there are some very key liquidity here that you have to pay close attention to. Right, firstly will be this yellow rhythm here. This is important. You need to pay close attention to that because we had some liquidity previously here. Now 5-day will remain close to this level here where the wedge is. Right, so you have to understand where the wedge is here, the green and the yellow. So 5-day may situate itself closely in between. So pay close attention to this liquidity. If this wants to head down, you will have to grab that together with the break of that orange liquidity. So I will talk about this orange a little later, but pay close attention to that. Now the larger dump now obviously will be where the 20-day moving average is. And as I mentioned earlier, if this truly wants to dump, 5-day will start trending down closer to converge with the 20-day moving average. Now this is the liquidity you want to watch out for if this wants to head down. So you can afford to wait for some structure here, preferably with the yellow rhythm and the blue rhythm here, waiting for the 5-day to start trending down to meet us near where the blue liquidity zone is here. So this is important, where the 20-day moving average is. So if you're just anticipating for a market correction, a market dump, or you're anticipating a negative catalyst, I just set alerts at this blue rhythm, you'll be fine. Even if you missed it, you'll be absolutely fine. But right now you have to understand where we're at. Now the market has already grabbed some liquidity of this magenta and of this 5-day moving average. Right, so right now we have closed the cup here. You're seeing that happening together with this green rhythm. Now, ideally, we do form some more liquidity with this magenta here. That's what I hope will happen if we head up. We re-grab 5-day again before we grab this liquidity here. Now, this yellow 664 is really important. I want you to take a look today where the liquidity was built at that yellow 664. So pay close attention to this liquidity zone here. Right, so if the market wants to grab more liquidity and is kind to us, we get retest 5-day grabbing this liquidity near to that green rhythm here. So pay close attention to that, where the green rhythm is tomorrow. Now, if we do break out a retest here near the highs forming under the cup, it's never too late. So you can always afford to wait for liquidity to start building here. Understanding macro structure here is important too. Because if 5-day was to start trending up, this is where it starts to retest the upper Bollinger again. And we start bouncing up the upper Bollinger that's trending up here, together with the 5-day that's trending up. So if we continue the bull run, this is what's going to happen. I talked about this many times, and you've seen that happen multiple times here, where the 5-day and the Bollinger is just creating this absolutely unstoppable combination here. So understand this, and you will be able to see the macro context, and from there translate it into the chart that you can apply your trading decisions on to make money. And most importantly, what you're trying to do is to manage your risks as tightly as possible. So when you understand the macro context together with the micro structure of how to be planning your trades, well, I would say that you have a very good measure of your risk to rewards. Very importantly, please watch Sunday's videos from last week. I missed a couple of videos over the weekend, so I apologize for that. Still not fully recovered, but I'll do my best, as will you. So please watch that, chain up the plays from the videos last week. They are still absolutely relevant. Not just in identifying the algorithms and the liquidity areas, but also understanding the macro context. See it play out day after day, and from there you have a better sense, and most importantly, have a deeper understanding of the pulse of the market. So once again, thank you very much for watching. I'll see you closer to opening bell.